Hey everyone, welcome back. If you've ever felt lost reading about stocks, bonds, or mutual funds, you're not alone. Investing has its own language, but today, we're decoding it. We'll cover many essential terms in plain English. We'll group them alphabetically, from alpha all the way through to yield. No jargon overload, just simple examples. Grab a notebook, hit like, and let's dive in. First up, the A's. Alpha. This measures how much extra return an investment gives you compared to what you'd expect from its risk level. Think of it as the edge a smart fund manager adds beyond just riding the market wave. Positive alpha, you're beating expectations. Annual report. Every year, companies send shareholders this audited summary of their financial health. It's like a yearly report card. Annualized. If something happened over 6 months, we stretch it to show what it had looked like over a full year. Asset allocation. Deciding how to split your money across cash, bonds, and stocks to match your risk goals. Bear market. When stocks drop 20% or more. Opposite of a bull market. Rising prices and optimism. Blue chip, reliable established companies like Apple or Coca-Cola. Low risk, steady performers, named after valuable poker chips. Bond, basically an IOU. Governments borrow from you and promise to pay back principal plus interest over time. Capital, long-term money in a company. And capital gain, that's the profit when you sell higher than you bought. Common stock, securities that represent ownership in a corporation. Corporate bond, a long-term bond issued by a corporation to raise outside capital. Custodian, a bank that holds a mutual fund's assets, settles all portfolio trades, and collects most of the valuation data required to calculate a fund's net asset value, NAV. Market capitalization, shares times price. It tells you the company size, large cap, mid cap, or small cap. Dividend. A dividend is a portion of a company's profit paid to common and preferred shareholders. Dividends provide an incentive to own stock in stable companies even if they are not experiencing much growth. Companies are not required to pay dividends. Diversification, spreading investments so one bad performer doesn't sink you. Don't put all your eggs in one basket. Dollar cost averaging, investing fixed amounts regularly. It smooths out costs by buying more when prices are low. Equities, shares issued by a company which represent ownership in it. Ownership of property, usually in the form of common stocks, as distinguished from fixed income securities such as bonds or mortgages. Stock funds may vary depending on the fund's investment objective. Federal funds rate, the key interest rate set by the Fed. It influences everything from mortgages to savings. Fixed income fund, a fund or portfolio where bonds are primarily purchased as investments. There is no fixed maturity date and no repayment guarantee. Fixed income security, a security that pays a set rate of interest on a regular basis. Growth investing, betting on fast-growing companies. Value investing is finding hidden gems at a discount. Index, an investment index tracks the performance of many investments as a way of measuring the overall performance of a particular investment type or category. The S&P 500 is widely considered the benchmark for large stock investors. It tracks the performance of 500 large U.S. company stocks. Inflation, a rise in the prices of goods and services, often equated with loss of purchasing power. Junk bond, a lower-rated, usually higher-yielding bond, with a credit rating of BB or lower. Liquidity, how easily you can sell. And NAV, that's the fund's per-share value, calculated daily. PE ratio, price divided by earnings. It tells you how expensive a stock is relative to its profit. Portfolio, a collection of investments owned by one organization or individual, and managed as a collective whole with specific investment goals in mind. Preferred stock, a class of stock with a fixed dividend that has preference over a company's common stock in the payment of dividends and the liquidation of assets. There are several kinds of preferred stock, among them adjustable rate and convertible. Premium, the amount by which a bond or stock sells above its par value. Recession, a downturn in economic activity, defined by many economists as at least 2 consecutive quarters of decline in a country's gross domestic product. Risk tolerance, the degree to which you can tolerate volatility in your investment values. Securities, another name for investments such as stocks or bonds. The name securities comes from the documents that certify an investor's ownership of particular stocks or bonds. Share, a unit of ownership in an investment, such as a share of a stock or a mutual fund. Sharpe ratio, reward per unit of risk. Higher is better. It measures how efficiently you're taking on risk. Stock, a long-term, growth-oriented investment representing ownership in a company, also known as equity. Time horizon, the amount of time that you expect to stay invested in an asset or security. Volatility, the amount and frequency with which an investment fluctuates in value. Yield, annual percentage rate of return on capital, the dividend or interest paid by a company expressed as a percentage of the current price. Ooh, we covered a ton. From alpha to yield, these are your building blocks. Which term surprised you most? Drop it in the comments.